Hi, this is Will Cook with the Will Cook Group at Keller Williams Luxury Homes. Welcome back to my video blog. Today I'd like to answer the question, is our real estate market slowing down? Well, to answer this question, I'd like to start with how our inventory has changed in a year-over-year basis. If you look at this first slide, you'll see that as of June, we were way down as a nation in terms of the inventory available to home buyers. And in fact, that was down by 43% in the United States. If you look at California, we were down 33.5%. However, in this next slide, you'll see that that has changed some from June to July, where California's inventory has actually increased and it's now down by 18%, which is still down a lot, but not as much as it was in June. So at least we're moving in the right direction. As we've talked about before, the main constraint in our market has been the lack of supply of homes for sale. As buyers, are looking for larger spaces and sellers have been concerned about the COVID pandemic. We have had a huge constraint of homes available for sale, which has driven our market higher. As we're seeing, our inventory is beginning to increase some, and some of that is a normal seasonal activity, and the other part of that is buyers or sellers, are becoming much more comfortable in putting their home on the market. In this next slide, I'm going to quote the chief economist at Realtor.com, Danielle Hale, who states, "If these changing inventory dynamics continue, we could see a wave of real estate activity heading into the latter part of a year." This is good news for buyers. As more homes begin to come on the market and are available to buyers, the demand is still there. We're just seeing some buyer fatigue in terms of the competition they have to go through in order to secure properties. But if there are more choices for them, then they will more than likely move forward in purchasing, especially if interest rates are staying low. To point out what's going on in our local market, I'm going to show you this graph, which shows our inventory levels for June of this year. It shows our number at 654 homes on the market, which is very low. You'll see it's much lower than the previous year, which was 2340. But if we move and look at the next slide, which is July of this year, as of August 1st, we had 791 homes on the market, which is still low compared to last year at 2,050, but it's higher than the July 1st numbers of 654. So this is a good indication that we are moving in the right direction in terms of our supply constraints. Unfortunately, we're still having some challenges with new home builders. There are supply chain issues and issues getting skilled labor in order to build homes. And the Wall Street Journal, I'm quoting, says home builders have sold more homes than they can build. Now they are limiting their sales in an effort to catch up, helping to push prices even higher. So as we are seeing more resale homes starting to come on the market, our new home builds are now constrained based on supply of materials and skilled labor, and have basically sold a number of homes that they're having difficulty in delivering, which is also putting a constraint on our market. Another quote I have for you is from the CEO of D.R. Horton, David Auld, who states, "Through our history, to have somebody walk into our models and to tell them we don't have a house for you to buy today is something that is foreign to us." So as we're seeing our resale homes increase in the number of homes that are on the market and available, and our new build homes are constrained by supply and skilled labor shortages, we do have another bit of a headwind coming at us. And I'm going to quote Realtor.com, who states, "The fears of a more contagious version of the coronavirus could prompt some homeowners to delay selling their homes, which would press on inventory levels just as they were starting to see some improvement. If buyer demand stays high and inventories fall again, That could then press on home prices even more and ignite more bidding wars for our limited housing stock. So it's a difficult question to answer. Is our market slowing down? Because it seems like we're beginning to get more homes on the market to sell, and buyers are excited about that, and that possibly they won't need to be competing so much in bidding wars. However, the advent of the constraints on new home builders and the possible different variants of the coronavirus could begin to put more constraints on the supply side, which could put us back in a situation where we were earlier this year. So stay tuned for more information about this market as we'll continue to track it. In the meantime, if you're looking to buy a home, interest rates are still at incredibly low levels, and we'd love to help you find that perfect home. And if you're looking to sell, this could be the sweet spot for you to get in on the market and to take advantage of some of the highest appreciation that we've ever had in our area. We'd love to help you with that as well. Please feel free to reach out to us, give us a call, a text, or an email. Also, if you have any other real estate related topics or questions that I can answer, please feel free to let me know about those as well, and I'd be happy to make a video. Thank you so much for watching. See you next time.